Welcome back, Walter FX gang. Yeah, it's good to see you guys once again. So today I'll be showing you how to set your risk to reward ratio. That is your R to R. Risk to reward ratio is basically knowing how much you're going to risk on the trade and how much you're going to make if the trade goes in your favor. So basically, risk to reward ratios by different traders, depending on their strategy and their beliefs, ranges from like 1 to 1, 1 to 2. Some even go as high as 1 to 5. But personally, I like to use a 1 to 2 risk to reward ratio, meaning I'm risking like 50% of what I stand to make, or let's just say I stand to make twice what I am risking. That's if the trade doesn't go in my favor, what I will lose will be half of what I will get if it was to go in my favor. That sounds very good, right? Because okay, let's say I have $10. Yes, I have $10 that I'm willing to risk. I will look for a trade that if it was to go in my favor, that $10 which I can lose will give me 20 if it was to go in my favor. Not that it will give me 10 back. I don't want $10 to make $10 back. I want $10 to make $20. If fine, I lose the trade, I lose only $10. But if I win the trade, I make $20, giving me $30. Sounds like a good deal, right? So that is why my target is always a 1 to 2 risk to reward ratio, meaning I stand to make double of what I am risking. So I'm going to use this trade example right here to show you how a 1 to 2 risk reward ratio presents itself. As you see here, I am trading gold. So I saw the setup right here showing me that okay, a double top has formed. So I am expecting that since it has rejected the resistance twice, I'm expecting price to sell all the way down to the major supports, which I have down there at 23. So I put my stop loss just above the last rejection because I don't expect it to come back there, which it still can because nothing is sure in Forex, but it's most likely not to come back there. So that is why I have my stop right there. So if I am wrong on this trade, I lose half of what I stand to gain. As you can see, my stop loss right there, just above there, shows you how tight it is. You see the difference between my stop loss and my entry. My entry is at 28, the stop loss is at 31. But my take profit, where I'm expecting price to go in my favor, is at 23, meaning I stand to make double of what I am risking. And you see, I got confident in this trade and I took another entry when I saw that price broke that smaller resistance. I took another entry which doubled my my profits, because sometimes there are just some trades that look so good, you know that okay, this thing is most likely to go in your way. People just tend to double up. Will I advise it? I would advise it if, like, okay, you have back tested your strategy many times and you feel comfortable and you feel confident that okay, yes, this is going in your way. But as a beginner practicing and still learning to believe in your strategy, I won't advise you to take double entries. Focus on your risk. Make sure you're not risking more than what you can afford to lose. That should be your main focus as a beginner, nothing else. So now if you look, I'm already in a profit of about $100. By the time I hit my take profit, maybe this trade should have given me $150. Like, amazing, right? In a matter of minutes. That's the beauty of Forex. But keep in mind that this trade can go against me. But if the trade was to go against me, I will only be losing about $75. But you see it going in my favor, I will make $150. So I have more to win than I have to lose. So I'll advise for you to backtest a strategy which you know that will give you a 1 to 2 risk to reward ratio, so that even if you don't win all your trades, with this type of strategy, I can win 5 out of 10 trades and I will still be profitable. Do you get the whole idea now? It's all about strategizing and managing risk. So I can take 10 trades, even if I win 5 to 6 of those trades with my 2 to 1 risk to reward ratio, I will still be in profits. If I go as high as 7/10, the profits will just be wild. So that's why you need to focus on having a good risk to reward ratio. You can even look for 1 to 3, but remember to back test this strategy and know that it works, and know that, okay, yes, this thing happens most times. You don't want a strategy that doesn't work because you're trying to force a huge risk to reward ratio like 1 to 6, 1 to 7. If you can find a 1 to 6 risk to reward ratio that works, then beautiful. But make sure you have back tested it on your demo multiple times, build that confidence, and execute your trades. Well, that's all for today, guys. I hope to see you in the next class. If this information was useful, please like the video. If you haven't yet, subscribe and stay tuned. See you in the next class. Water FX King. We out. Cheers.